Coming up on Market to Market, a lethal storm disrupts lives, livelihoods, and markets in the East. And while it may not be the top priority for most voters, immigration remains a key political issue. And hours before the election, traders get some skin in the game by speculating on America's next president. Those stories and market analysis with Alan Brugler next.
Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success. This is the Friday, November 2 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The government released its final unemployment report Friday, just days before the elections. And as you might expect, both President Obama and his challenger Mitt Romney seized the numbers to make political hay. According to the Labor Department, U.S. employers added 170,000 positions to their payrolls in October. Nevertheless, America's unemployment rate ticked back up to 7.9%. Keep in mind, no president since FDR has been re-elected when employment exceeded 7.2%. But other data this week suggested that record could be in jeopardy. The Institute for Supply Management reported its manufacturing index rose to 51.7 in October, marking the second consecutive monthly improvement. Meanwhile, the Conference Board said its consumer confidence index surged last month to its highest level in nearly 5 years. And in the wake of a dismal October on Wall Street, U.S. equities began November on a positive note as the Dow, S&P 500, and NASDAQ all rallied on Thursday, but fell back on Friday. President Obama held up Friday's payroll numbers as a sign of real progress. Governor Romney, on the other hand, said rising unemployment indicates America's economy is at a virtual standstill. And while the economy is the top issue for most folks this electorate, some disenfranchised voters have other priorities. Paul Yeager explains.
Last fall, in the run-up to the Iowa caucuses, illegal immigration was a hot topic on the campaign trail.
My voice is getting a little hoarse.
But this fall, despite numerous appearances by President Obama and Mitt Romney, the issue is almost never mentioned in this key battleground state. While Latinos account for just 5% of Iowa's population, their numbers have increased by 110% over the past 10 years. And nowhere is that growth more evident than right here. Perry, Iowa has a population of about 8,000 people. It's located north and west of Des Moines, and it was founded by German immigrants who worked on the railroad. But over the last 30 years, the population has changed. Immigrants have come from Central and South America looking for work, and they're finding it at the local meatpacking plant.
I always like to say that Perry, Iowa is a place where we embrace our heritage and celebrate our diversity, and I think that's what we've become today. So you want the overall size of the shelf?
Jay Pattee owns Ben's Five and Dime store and serves as the town's mayor. He's watched as nearly 3,000 Latino immigrants arrived in Perry.
Perry was a pretty ivory place in 1980 when we moved here. And when it started to change, I think some people were just plain afraid of the change. I don't know, it's the fear of the unexpected, I guess.
Does that exist at all today?
Maybe so. I would say it's a lot less evident than what it was before.
According to the mayor, one reason the town has adjusted so well is that newcomers were never isolated in separate neighborhoods or schools. Pattee, a conservative Democrat, thinks that has made folks more moderate on the immigration issue and less tolerant of extremist language used by some candidates.
Michelle Bachmann, when she was running for the nomination on the Republican side, she came to Perry, and I think the purpose was to build up support for her really tough stance on immigration. I'm sure that she was disappointed in what she had hoped to get out of her visit here.
Early 80s, I think Perry was probably mostly Anglo.
Even Philip Stone, a retired school teacher, city councilman, and lifelong Republican, was disturbed by the tone he heard during the caucuses, especially when candidates proposed deporting illegal immigrants.
I personally have always believed for a long time that we should set up a procedure for illegal immigrants to get their citizenship. Not easy. It isn't easy right now. I don't think we can deport them. I don't think we can send them back. I mean, we're just being realistic. We're not in a position to upend families in the neighborhood of 8-10 million people and send them back.
Stone also worries that anti-immigrant rhetoric is turning off a group of potential voters.
As a Republican, I think that there are lots of opportunities to work into the Latino communities and bring those people in.
Are they welcome?
I'm sure they would be. Again, their perception may be that the Republican Party is not theirs for a variety of reasons.
Iowa has seen its share of deportations of illegal workers, most notably in huge raids at meatpacking plants in Postville and Marshalltown 4 and 6 years ago. But those facilities have since closed or been taken over. Tyson Foods, one of the largest meat processors in Iowa, uses a system called E-Verify to check the legal status of workers. It's a system operated by the Department of Homeland Security, and it's used on a voluntary basis across the country. Mitt Romney has said he would like to see more states require businesses to use it. Farmer and Republican State Representative Julian Garrett sponsored a bill that would do just that in Iowa.
It's a very simple system. It isn't costly to the business. With all the controversy and all the problems we've had at the border and all of that, it just struck me like this is so simple and efficient and economical, and I think it would have a huge impact on the problem.
Garrett's bill failed during Iowa's last legislative session, but if reelected, he hopes to try again next year. But Obama supporter Sandra Sanchez believes programs that encourage young immigrants to become legal citizens should be welcomed in Iowa.
We are a state that is aging, and it's aging very rapidly. Our baby boomers are retiring, and we are not having young people staying here other than immigrants. If it wasn't for immigrants and refugees, and we already lost a congressional seat because we didn't have enough growth.
And with polls indicating a tight presidential race, both candidates probably will avoid hot-button issues like immigration for fear of alienating a single vote. Reporting from Perry, Iowa, I'm Paul Yeager.
Both President Obama and Governor Romney were back on the campaign trail Thursday, ending a 3-day lull in the wake of Superstorm Sandy. The storm that devastated parts of New York and New Jersey is blamed for more than 90 fatalities, nearly half of them in New York City alone. More than 4.5 million homes and businesses, including about 500,000 in New York and its northern suburbs, are still without power. Wall Street endured its first 2-day weather-related shutdown in more than a century due to the storm. But even as Sandy wreaked havoc on the financial district, trade continued on electronic exchanges. And as David Miller discovered, some traders were even speculating on America's next president.
While the New York Stock Exchange was dormant in the wake of Hurricane Sandy, a stock ticker in the heart of the Midwest was spitting out data from thousands of active trades. But these weren't shares of General Electric or soybean futures from the Chicago Board of Trade. In fact, this market is tied directly to the November elections and is one of the only legal ways to speculate on an intriguing commodity: America's next president.
Just like any other market, it's a futures market, like a corn futures market, except the things we trade are political candidates' outcomes rather than the price of corn at some time in the future.
These streaming quotes make up the Iowa electronic markets, formerly known as the Iowa political stock market, and it's home to a multitude of potential trading opportunities. Are you bullish that Mitt Romney will win the popular vote Tuesday? Or perhaps a second term for President Obama is more of a risk-off position? Put your money where your political prognostication lies. That's right, real money is traded here on the University of Iowa campus.
This is our winner-take-all market. So in this market, contracts are going to pay off $1 for the candidate who gets the largest share of the popular vote and $0 otherwise. The blue line here is the Democrat price, and the red line, the Republican price. What you see here in the middle where things are starting to spread out is during the Republican campaigning when it wasn't clear who was going to be the nominee. So here it's Romney, Santorum, Gingrich arguing with each other rather than positioning themselves against the Democrat. Where prices are coming back together in here is after that first debate when there seems to be more.
The second and more heavily traded IEM commodity is candidates' share of the popular vote. Its graph is tighter as experienced traders attempt to predict the exact vote percentage outcome on November 6. As of November 2nd, President Obama has a small lead. This decades-old political futures market plays by a strict set of rules. Each account is limited to no more than $500. Shares are initially priced at $1, but the trade quickly establishes their true market value. Since it operates exclusively online, the IEM is open to traders all over the world. Nearly 2,000 currently have positions in the unique market, and the university charges a small one-time fee to cover operating costs.
It's illegal to bet on elections, right? It's not illegal to have markets, but markets are regulated in the U.S. to protect traders. So our market, run for research and teaching purposes, we stay small, so we're operating under no action letter from the CFTC.
But is this political market merely a low-cost tool for professors, students, and political junkies? The data demands a closer look. In 2008, many well-established polling operations predicted victory for then-Senator Barack Obama, but the margin fluctuated wildly. According to the Iowa electronic markets, its trades have proven to be more accurate than polls conducted by Zogby, Gallup, CBS, ABC, NBC, and Fox. 4 years earlier, the IEM correctly predicted George W. Bush's tight 2004 re-election over John Kerry. And in 2000, the IEM correctly picked Al Gore as the winner of the popular vote, even though George Bush went on to win Florida and the presidency. Which brings up an important note. The traders on the IEM predict the national popular vote, not the Electoral College. So why is this market so accurate? According to Director Joyce Berg, real-time data and active traders weed out political partisans.
We do have some traders that trade with their hearts. They tend not to affect price, though, because they'll come in, they'll buy up the candidate of their choice, and then they hold on to that position till the election. Once they stop trading, they're not affecting price anymore.
While the University of Iowa may be one of the few legal political markets trading political futures in the U.S., overseas, a wild west of online prediction markets has flourished far from the grasp of the CFTC. Ireland-based InTrade advertises itself as the world's largest prediction market, with categories ranging from the likelihood of Iranian airstrikes to the outcome of the Academy Awards. But there is no greater gambit than the U.S. presidential election, where volume exceeds 5 million trades this cycle.
U.S. elections are really, our marquee event. It's what brings most of our traders to InTrade. Obama's really held a comfortable lead the whole time, sort of trading around about the 55 to 60% mark. He took off and nearly peaked at about 80% in September. He's kind of fallen back down now in the market, for the last 3 or 4 weeks.
Unlike the IEM, InTrade focuses on the Electoral College and does not put monetary limits on account transactions. With only hours left until November 6, InTrade's legion of traders peg President Obama's chances of being re-elected at better than 60%. Mitt Romney currently hovers around the mid-30 percentile. If you want to buy 10 shares of President Obama at the current market price of more than $6 per share, his re-election earns you the maximum $10 per share, a gain of more than $30 in this case. But an Obama loss wipes out your total investment. Romney's shares currently trade under $4 and have more potential earning power. A 10-share Romney investment could return more than $60 in profit, while a loss once again brings you back to zero. So how does InTrade match up with previous event outcomes?
In looking back at past elections in 2004, the market predicted a victory for George W. Bush, which is what happened, and also predicted all 50 states correctly as well. And then in 2008, predicted a comfortable victory for Barack Obama, and the markets predicted 48 out of 50 states. They got Missouri and Indiana around the wrong way.
InTrade also allows traders to predict any potential outcome of the November elections, including this scenario: a Republican president and U.S. House alongside a Democratic Senate, which the market pegs at roughly 15%. That's only a few points higher than InTrade's more peculiar prediction markets, including whether NASA will announce the discovery of extraterrestrial life before the end of 2013. Those shares currently trade at 90 cents. So what is one to make of all these markets? Despite their intriguing character, these electronic exchanges feature many of the same risks and rewards as any other market. Nevertheless, it just may be more interesting to predict the next president than the price of a barrel of oil. For Market to Market, I'm David Miller.
Next, the Market to Market Report.
While Sandy forced a two-day closure of equity markets in the East, commodity traders pressed on electronically and in Chicago. For the week, December wheat moved less than a penny higher, while the nearby corn contract moved almost 18 cents higher. With dry conditions in Brazil and increasing Chinese demand, soybeans rallied for the second time in as many weeks as the January contract settled with a weekly gain of 27 cents, while nearby meal prices advanced by $7.50 per ton. In the softs, cotton continued its downward trend, posting a loss of $2.07 per hundredweight. In the dairy market, November Class 3 milk futures gained a nickel, while the deferred contract moved 5 cents lower. Over in livestock, December cattle gained 17 cents, nearby feeders lost 40 cents, and the December lean hog contract moved $1.15 lower. In the financials, the euro lost 124 basis points against the dollar, crude oil moved lower with a loss of $1.42 per barrel, COMEX gold declined by $36.70 per ounce, and the Goldman Sachs Commodity Index lost 13 points to settle at 626 even. Here now to lend us his insight on these and other trends is one of our regular market analysts, Alan Brugler. Alan, welcome back.
Great to be here.
Glad to have you. It's been a big week with Superstorm Sandy in the news and impacting so much of the East Coast. What effect has that had on the markets this week?
Well, it did have a bit of an effect on the livestock sector because people don't realize that if you have all those restaurants for 10 million people closed for several days, it cuts your consumption. We did have at least 3 packing plants that were shut down because of power outages or high water, and that affected the demand for livestock in the Eastern Corn Belt as well. And we're still not back to normal. There's still a lot of closures and a lot of transportation problems in particular. But it's not the heart of the agricultural meat industry, but it is a big demand center.
Sure. So we did see some waterfall effect there from the storm.
Right.
Moving over to the grain complex, we saw wheat relatively unchanged this week. Where's the wheat market headed?
Basically, wheat's been sideways ever since July, and with a slightly downward drift to it. I think the problem is we're not making the numbers that we need to see to hit the USDA forecast for the year on exports. And the window's getting narrower and narrower for us to do that as South American production comes closer to harvest. Actually, Argentina is about 6% harvested now. Australia's just begun harvest, so there'll be a couple more pockets of supply there to compete with the U.S. wheat. We're still not competitive into the Middle East or into North Africa. Egypt bought Russian and Romanian and French wheat this week. So the market's looking for proof that we can get the export business done. We think there'll be a window there in late December and January to do that. But if it doesn't happen, prices will have to go lower eventually.
So do you see prices sideways until we get to that late December, January turning point?
Yeah, some of our technical indicators say there's basically no trend right now, and the trend is your friend. So if there's no trend, it's still no trend.
All right. Looking over to corn. Where do you see corn headed? We're still not seeing much of any exports to speak of. Where do you see that driving the market?
Well, corn is doing what it needs to do. It's rationing the consumption. We're, as you mentioned, very, very slow export sales. The ethanol side of things is not real good either. We've had a couple plants this week that announced they're going to shut down at the end of November, or they're not going to reopen. The margins aren't good there. And so we're seeing some rationing on the ethanol side as well. The livestock section is the big question mark because the USDA has a cut in feed and residual use, and we're not sure if we're getting that part. But the other two parts are declining. I think the market can just stay at this level for a while and accomplish the objective. The other question, of course, is do we get an increased supply out of South America in the spring? What happens to the Argentine corn crop and the Brazilian corn crop? Brazil in October had record corn exports, 3.6 something million tons. So that's one of the reasons we're not getting the export sales is coming out of there.
People are just waiting to see what happens from South America still?
Yeah, if they have a problem, then our prices can go a lot higher. If they come up with a competitively priced supply, then we'll go back to looking at acreage for next spring here in the U.S. You know, are we planting more corn or more beans? But it won't be quite as urgent as it would be if something happens down south.
All right. With the way things stand currently, do you see a trend in the market? Anything producers could hang on to?
Well, corn's trying to work just a little bit higher. We're setting on some pretty good speed line support on the charts, and so we're being patient on corn and not expecting to go back to the old highs, but we are expecting a little bit of post-harvest firmness here, and then either we get a surprise of some type that spurs the market, or next spring we get something on the acreage side.
All right. Now looking at soybeans, we're seeing the exact opposite of corn on the export side. Soybean exports are record highs or close to?
Well, not quite record, but we've had over 60 million bushels each week for the last 2 weeks. The record's somewhere in the mid-70s, but very strong exports shipments, and we expect that to continue. Probably for the first 6 months of the year, we'll be up 40 to 50% over a year ago on exports. Again, that's a result of the drought that they had down in South America last growing season. And so the U.S. got all the business, and now it's got to be shipped. The big question here is whether the farmer will sell enough of the beans to the shipper. We're seeing some pretty strong basis bids, and the market's trying to buy that grain away from the farmer, but he's saying, well, it's down quite a bit from where it was in August, and I think I'll just wait. So a little firmness there.
So do you see basis getting stronger as we work through the rest of this fall and into early winter?
It's always a trade-off between futures price and basis. Either the board goes up and does the heavy lifting, or if the board isn't because speculators are liquidating, et cetera, then the basis will have to firm up. And right now I think that's probably the more likely of the two.
All right. So for folks out there with beans in the bin, probably best bet, hold on to them, see where this market goes, or what would be your advice there?
Yeah, we just put out what we call price and probability forecast. It says that statistically we've got pretty good odds of getting into the upper 16s or maybe even as high as $17 over the next few months. So that says wait, but realize that we also have downside targets from that same methodology.
Sure. Let's look at let's move back to livestock. You touched on it earlier. Where do you see feeder cattle heading?
Feeder cattle their values derived by the corn and by the live cattle. Live cattle price is still pretty strong right now. Corn, as we mentioned, we think has a little bit of an upward bias to it right now, so that would tend to work against the feeders, and you're seeing that. The feeders have sold off over the last few weeks here. We don't have a lot of feeder cattle out there. The numbers are down. The herd's the smallest in 50 years, et cetera. So there's a natural support there in terms of the supply side, but the demand's going to be controlled by whether the feedlot can make any money with them.
And do you see that support that's out there providing enough strength to get feeders through the fall and into the winter and into springtime?
I think you have a broad uptrend there that's because of the numbers, and you'll see these periodic corrections of $5 or $6 down because they don't work at the feedlot. But I think overall we're still in an uptrend.
All right. Well, let's move over to live cattle. Where do you see live cattle moving?
Live cattle are already pricing in record high retail prices for next spring. The question is, will the consumer pay it? All right. If you take the futures trades that we're seeing, the 133, 135, 136, if you go far enough out, that would imply as much as $210 for choice cutouts. We've never been able to make a price above 200 stick. So the board's saying, the consumer, we're going to have less beef. You're going to have to pay up. The question is, will they pay up, or will they shift to chicken or to turkey or something else?
And these higher prices are going to start to hit the consumer as we're looking April, March into that time frame?
Well, we're in a very tight supply right now. It does ease up. In other words, we'll have more finished cattle marketed as we go into year end. But then we know that the placements are down as far as what we'll have in Feb, March, April. And April's historically a pretty strong time for the futures. My concern is the board's already got a big price premium built into it. You know, for our guys that are a little more sophisticated, we're selling upside calls, something above the market for next spring, thinking that it won't ever get there.
All right. And now, in order for it to get there, we'd have to see a lot of, it's going to have to come from the demand side. We're going to see a lot of strong demand and consumers willing to pay that price.
Right. We have to see the consumer pay more, and then you get into, is that an inflationary environment at that point, or is the economy really rolling along and they're feeling better about spending the money? Or if it's none of the above, then we probably won't get it to happen.
All right, time will tell. Let's talk hogs quickly. Where do you see the hog market headed?
Hogs benefit from the tighter supply of beef that we see. We still have a little bit too much on the pork supply. If you look at the cold storage numbers, if you look at the cutout values themselves, they're down quite a bit from where they were in the summer highs. But again, we're seeing strength in pockets. Ham demand's really good around Thanksgiving and Christmas period, but of course most of those hams were bought by the processor for curing previous to now, so it's not helping the value of the hog at the slaughter plant right now.
You bet. And as we roll through the end of this year and into early next year, if we see a none of the above scenario we were talking about with the beef, there's not inflation, the economy's not stronger, are we going to see folks, the cutout values on hogs rising as they fall on beef, do you think?
It'd be unusual for them to go in opposite directions for very long. We do get a little help just because of the chicken numbers being down.
All right. Thank you so much, Alan. That wraps up this edition of Market to Market. But if you'd like more information from Alan on where these volatile markets just may be headed, visit the Market Plus page at our website. You'll find expanded market analysis, audio podcasts, and streaming video of our program, as well as links to our Twitter feed and Facebook account, all free at the Market to Market website. Be sure to join us next week when we'll examine the market impact of the elections. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success.